Earn more, save more, invest more, and give more. My simple thought for the day is make some progress. The journey to financial independence is a long one, and you can't get there overnight. Just make today a day of progress. Recently, some of you have given us some tips on a few under-the-radar companies that have huge upside. We've done a little research and want to share with you what we've uncovered with our community, the Moon Crew. There just might be some treasure sites here for you to look through as we try to avoid risks and find opportunities. This is the MoonShot Money channel. I'm Chase Vickers. Are you ready? Let's go. If you're new to the channel, welcome. We're so glad that you're here. If you're not new, welcome back, Moon Crew. We just recently kicked off a Twitter feed because we wanted to touch base with you between videos in case something was happening. So make sure and follow us on Twitter at MoonShotMoney1 so you don't miss anything. So before we begin, I wanted to tell you about my dad's book, Destiny Awaits. Some of you have purchased it in the link below, and we hope that you enjoy it. This is a great book that you will find very easy to read. And in Destiny Awaits, my dad demonstrates what it means to discover and pursue your God-given purpose. He takes you on an adventure searching for unique hidden gems that lie inside of every man, woman, boy, and girl. God's fingerprints on your life. If you're interested, you can check it out in the description below. Okay, let's look at some great stocks that have been flying under the radar. First, we want to look at Longview Acquisition Corporation, ticker symbol LGVW. Longview Acquisition is a special purpose acquisition company, and it recently announced that it is merging with Butterfly Network, which makes a portable handheld ultrasound device, plus an accompanying app for smartphones. Longview will change its ticker symbol to BFLY after the merger with Butterfly Network closes. There are some really big guns that are already existing Butterfly investors. The Bill and Melinda Gates Foundation is the headliner. Serious investors for sure, and they've been here for a while now. Butterfly develops the Butterfly IQ system, a transducer using semiconductor technology that can perform whole body imaging using a single handheld probe. No need for big bulky ultrasound machines that we all know and love. Powered by Butterfly's proprietary ultrasound on-chip technology, it connects to a mobile device and uses AI to deliver advanced imaging. 9 years ago, Butterfly was created to make high-quality ultrasound affordable, easy to use, and globally accessible to everyone. So think about this. Now a doctor somewhere in Africa can carry a handheld ultrasound device in his pocket. That gives him a window into the human body that he can see right on his iPhone through the Butterfly app. In the world of ultrasound equipment, the game just changed. Is anyone buying Longview? The answer may surprise you. Kathy Wood with ARK Invest is a buyer. ARK Invest bought approximately 460,000 shares for its ARK Genomic Revolution ETF, ARKG. So if you like following Kathy and her team, here's you an early opportunity. The ultrasound market is dominated by traditional cart-based devices, which Butterfly Network wants to change. Their portable products have sold over 30,000 units since launch. Butterfly Network has agreements in place with the majority of the largest 100 hospitals in the United States. So they are being accepted as a real option versus the cart-based models. There is a possibility here for some very real profits for the smart investor. Full disclosure, we have already purchased with an average cost of around $16 per share. Next, we want to look at American Well, ticker symbol AMWL. American Well is the second leading telehealth company in the United States. For the healthcare industry, the pandemic has resulted in a sharp decline in the number of in-person doctor visits. Doctors and patients have both wanted to minimize exposing themselves to the virus. That would be an understatement. Early outbreaks this spring were traced to hospitals and doctors' offices, where infected people were spreading the disease to doctors, nurses, and anyone else who they came in close contact with. This was before social distancing and masks. During the peak of the pandemic, American Well was facilitating 45,000 telehealth appointments per day. In contrast, it averaged 2,000 visits per day in 2019. That's 22 and a half times growth. In its last quarter, American Well generated $68 million in revenue, which was a 94% increase from the previous year. It also lost $87 million in the last quarter as the company focuses on growth rather than near-term profits. We like companies focused on growth. Its consumers include 150 health systems, 55 health plans including Anthem and Blue Cross. Here's the big aha moment for us. Google invested $100 million in the company. That's right, Google holds shares of American Well. Google holds a 3% stake. As part of the investment, American Well will use the Google Cloud platform. How big is that? The company's recent strong market debut reflects the excitement about telehealth and telemedicine. In comparison, Teledoc, which is the leading telehealth company, has gained 145% in the last year. The major factor which makes American Well attractive is the long-term projected growth in healthcare spending as the United States population continues to get older. American Well will also be able to find further monetization opportunities in terms of adding higher value services for doctors, patients, insurers, and employers. Go make some money, guys. Teledoc, which we will talk more about in a few moments, recently bought Longview Health because it wanted to give patients as well as doctors the ability to monitor their patients' health in real time. Another commonality between these telehealth companies is pockets full of recurring revenue. Once patients are comfortable with the platform, have their medical records stored on it, and have their appointments scheduled, they're probably not going to switch back. Think Amazon's convenience and time savings here. This moat will grow deeper and wider the longer patients use it and tell their friends and families about it. Full disclosure here, we own American Well with an average cost of little over $23 per share. All right, last in the group of these three healthcare related under the radar stocks is the aforementioned Teledoc, ticker symbol TDOC. Why do we view Teledoc as under the radar? Because vaccines are ready and many people believe the best days for telemedicine are already gone. Are they right? Teledoc could easily be considered one of the best healthcare provider stocks. As you already know, the company provides telehealth services delivering healthcare remotely through the internet and over the phone. When the pandemic hit in the spring, clinics closed and patients sheltered at home, leaving remote healthcare as a logical option for those people with chronic health issues. Teledoc is the leader in this space. The company's revenue soared 63% in the first half of the year. Can that rate of growth continue? Probably not. In fact, some investors have been worried that Teledoc's business has already hit its plateau. With the stock up 145% in the last 12 months, some think it might be time for investors to get out. But think about it. Teledoc's services aren't going to go away. A McKinsey survey earlier this year found that 76% of consumers were highly or moderately likely to keep using telehealth services, up from only 11% in 2019. And most patients, 74% according to the survey, are highly satisfied by telehealth once they try it. People want to avoid waiting rooms full of sick people. I know I do. Teledoc's vision is to be the front door to the healthcare system, and it looks like they are winning. Don't forget the acquisition of Longview Health earlier this year too. When you think about it, American Well, the second largest telehealth provider, may be another acquisition target in the near future. Teledoc should buy their biggest competition. Another reason to consider Teledoc now is the continued accumulation by Kathy Wood and the ARC team over the last few weeks. They view Teledoc as a major interrupter in the traditional way of visiting your doctor. They are right. When people get used to telemedicine, they will not want to go back easily. Full disclosure again, We are long Teledoc with an average cost of around $113 per share. So there you go. In our view, 3 under the radar healthcare stocks to buy now. And if you want to see more videos like this one, subscribe and turn on the notification bell so you never miss a video. What do you think about these 3 stocks? Let us know in the comments below. We try our very best to respond to everyone we can. Don't forget to follow us on Twitter at MoonShot Money 1 for daily thoughts from our team. We are not financial or tax advisors, so please make sure you do your own due diligence and research before you invest any hard-earned money in the markets. Earn more, save more, invest more, and give more. And always remember, if you're not interested in your money, someone else is. We'll see you next time.